The International Monetary Fund has warned that the world economy risks entering a decade of sluggish growth and rising debt. That's a period that the fund's chief calls the tepid 20s. IMF chief Kristalina Georgieva highlighted that inflation remains a problem, and with fiscal buffers maxed out, debt in many countries is just too high. Kate Fisher sat down with the IMF chief, who explained what could help support the global economy.
What we have seen over the last months is that the world economy is remarkably resilient. Growth is holding, despite the fact that central banks had to raise interest rates in many places to fight inflation. This strength is driven by two factors. The United States performing above expectations, and so do some emerging market economies like India, Indonesia. And second, by the foundation on which countries step after the global financial crisis, we have seen a lot being done for strong macroeconomic policies, and the payoff comes at this time of shocks.
And how does Asia fit into this? How does that region compare globally?
Asia is delivering 2/3 of global growth this year. It is a part of the world where a lot has been done to build strong macroeconomic fundamentals. The East Asia crisis taught governments that they should focus on good policies and strong institutions, and they have done it. Within Asia, like in the rest of the world, though, there is a growing divergence. Some countries are doing better than others. In some countries, inflation is still a problem. In others, it is not. The risk of some deflationary pressures has materialized for a while in China. So what does it mean for Asian policymakers? First, it means that they have to be data-driven in decisions they make. Don't look at the other guy, because what is happening there may not be relevant for you. And second, they have to combine actions on the short term, fiscal policy, build buffers for the future, monetary policy, make sure that you have price stability to step on, with investing in transformation, because if we want to capture dynamism and growth, we have to ride on the green transition, on the digital transition, and that means for policymakers, do support the transformational forces in your economy. Invest in your people, invest in digital infrastructure, so you can see growth picking up again.
What about any specific countries within Asia? Are there any that stand out to you either positively or negatively?
Well, clearly we see some of the Asian economies being very dynamic. India, Indonesia. We have seen their positioning in this new world being quite effective. We see some of the economies in Asia taking some very important policy steps, like Japan choosing to take a new road on monetary policy and doing it really well, preparing their economy and the rest of the world for policy action, and then taking this action smoothly. And then we see the largest economy in Asia, China, being now at the fork on the road, whether China continues with the traditional policies from the past, or it steps up to generate more domestic consumption, to move towards a bigger role for services, and on that basis to bring the economy in a new era.
Let's look at China specifically. Are you advising them, and what are you saying to them, and do you think they're going to respond?
We have had very engaged and constructive relations with China. We have 3 recommendations for China. first, resolve the property sector problems decisively. Why is this important? Because for many people in China, their property, their apartments, their houses is their pension, what they rely for the future. And when they see the value of real estate going down, that affects confidence and willingness to spend. We want to see China also building strong social safety nets, again for that same reason, to boost domestic demand. It is very important that China looks at the tremendous opportunities of the service sectors, and that is our second recommendation: healthcare provision, high quality education. They can play a role in the Chinese economy and finish what they have been so good in pursuing over the years: market-oriented reforms of state-owned enterprises, opening up, making sure that competition drives performance for the benefit of growth in China, but also to make China that continuous source of growth for Asia and the world it has been in the past. We believe that a package of reforms of that nature can lift up output in China by 18% over the next years. So it is not a marginal shift, a significant shift that can benefit China.
Fumio Kishida, Japan's Prime Minister, is in town at the moment, speaking to the President of the US. Just raised interest rates for the first time in 17 years last month. How do you see that economy doing this year?
Well, the Japanese economy has been performing quite steadily and strongly. Actually, growth is what we would say in technical terms, above potential. They have benefited from strong tourism last year, and that has carried forward into this year. Japan has done well during the late Prime Minister Abe's time to open up more space for women to participate in the labor force, and that is important because of the aging of the Japanese population. Japan can do more in that direction to make sure that all productive forces in Japan are fully deployed. For example, talking about women, yes, women stepped into the labor force, but mostly in kind of lower-end jobs. Opening up a chance for women to contribute more fully would certainly be good for the Japanese economy. And what we are particularly impressed is how careful Japan has pursued the changes in monetary policy. That gives us confidence.
Sri Lanka, briefly, what are your thoughts there for this year?
Sri Lanka has gone through a very difficult time, but we already see the positive impact of reforms that they have embraced. We see it in terms of building reserves. We see it in terms of economic activity coming up, and we see it in the success that they have achieved in debt negotiations. Domestic debt restructuring is almost done. Agreements with the official creditors have been reached. So overall, the direction is positive. We are also very pleased to see the country concentrating on governance issues. As you know, there has been a problem for quite some years, so prospects are improving, and our message to Sri Lanka is very simple: stay the course.
Pakistan, also some issues in its governance. Are you concerned about that economy?
Pakistan has a lot to do to get the economy on sound footing. And we have seen some good action taken under the current program of the IMF, but more needs to be done. More needs to be done on the fiscal front. The revenues are very low by international standards. Tax to GDP is around 12%. We think that you have to be at 15% to be able to support the economy. So more done on that front is critical. The rich people in Pakistan has an obligation to contribute to their country. There is a lot that needs to be done in terms of how public spending is being managed, and a lot to build the functioning of the economy on sound policy footing. They have been asking us whether we can continue working together. Of course, we will give a very good year to Pakistan, provided there is that strength of commitment to do what is necessary to strengthen the economy.
And finally, a quick word on Singapore, because I know you've just said in your speech there, it's the most ready country in the world for AI?
Yes. At the IMF, we have created an AI preparedness index that follows on three key areas: infrastructure, digital infrastructure, human capital, and innovation, regulation, ethics, this area of preparedness that requires concentration of the government. Singapore came as #1 in our IA preparedness index because they approach it holistically. There are countries that are great on innovation but don't do enough to invest in human capital, or they don't have a full coverage of digital infrastructure. Singapore has done it right.